Okay, good.
Thank you.
Now I just started recording now. So on the other hand, the lessons for the strategy just began for those who are going to watch this not live. So this is the standard chart, and to use the indicators I use and what I use to trade, for the first step to bring it to being a good trader is you just go to your indicators and strategies and you type MAT matrix, and you just click once on market maker matrix by just me. At this moment in time, the version is 2.0. Then you should have this indicators: yellow, red, aqua, white, which is actually gray because it's my dark screen, and the blue over here. This is the blue. And then you will have this, go on a 15 minutes chart to make the work easy. You'll have this red and green as well. Let me explain this shortly. This red is the resistance. This red acts as a resistance, and the green always acts as a support. So this here acts as a resistance. This acts as a support for the day. This here is the beginning of the day, and this is the end of the day. So here is the beginning, and here is where the day ended. Here the day began, it ended here. So we have a good view, like when you look at the view, like you should know, oh, this was a day, this was a day, this was a day, this was the resistance, this was the support on that day, which has been taken from this low over here, and this was the support we were calculating during the day, probably taken from this high over here. On this day, this was the resistance taken most likely from somewhere in the past. This is it. So you actually don't have to zoom out to draw support and resistance all the time if you are trading globally. That being said, red stands for the resistance, green stands for the support. The next thing you should know is the white and the aqua line. Just very few stuffs about them. If the white line, if the aqua line is below the gray line or white, then we find ourselves in a downtrending market. Right now, we find ourselves in a downtrending market. If the aqua line is above the gray, then we find ourselves in an uptrending market. Example is this. This is an example. So at this moment in time, we find ourselves in an uptrending market. So looking the chart from here in a 15 minutes chart, you know this is an uptrending market. Analyzing it on the 15 minutes chart. So know that on the 15 minutes chart, it's a downtrending market, but it does not mean that if you go to a 5 minutes chart, it's still going to be a downtrending market. Look at this. On the 5 minutes chart, it actually goes up, down, even though it's still in a downtrending market, but the wave looks different, same as on the 1 minute chart. 1 minute chart, it's almost, you see, it was an uptrending market here, find yourself here, downtrending market, and almost right now find itself again an uptrending market. Please write down these points because these are little things you could actually use. Then the next thing you should use while trading is, after you've set this, you know this is your resistance, this is your support, and the red is your resistance. You know this is your downtrending market because the aqua line is below, and this is an uptrending market because the aqua line is above the white. The next thing you should do, you should be able to know when you look at the market is, are buyers in power or are sellers in power? You would know if the buyers are in power when the yellow line is above the red. When the yellow line is above the red line, the buyers are in power. Look at these candles. They are all buying, all buying, all buying. And in case the flip happens, I call it the flip. The flip means the yellow line and the red line crosses. Then it changes. Look at this, buyers in power, yellow above the red over here. The moment the flip happens at this point, The yellow line crosses the red and comes down. What does that mean? Sellers are in power. Sellers are in power at this moment. You see sellers, 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 sellers. And it's sold till this resistance here, over here. You see market rejection here, market rejection here, market rejection somewhere here. So that's the next thing you should know. Little stops, right?
No, we're not getting you once more.
Better now. Hello? Okay, yeah, okay, good. Sorry. So I'm just going to repeat. When the flip happens, when the yellow line crosses and goes below the red line, we have sellers come in power. Independent on the trend of the market, just know sellers are in power. At this moment, buyers are in power at this present moment. So that also being said, those are the little things you should use and put together to analyze your market. That being said, all this can't tell you if you are taking a trade or not. You don't go to the market and say, oh, buyers are in power, I buy. Sellers are in power, I sell. This is when the holy entry comes in. When do you know when to get into the market? I'm going to now need the RSI. So for those who don't have it, indicators as well, RSI. The relative strength index, not this, not this, not this, the fourth one. Just click on it once and you have this. And you have this. But this is not how we want it to be because we want to change the settings. So we go to settings and we put the upper band to be 80. We put the lower band to be on 20. Why? Because mostly it is not 100%. Mostly when the strength index of any indices, commodities, currency pair reaches 80, it tells us that that market has overbought. I'm sorry for those who are listening to this for the 100th time. Just going to do it for the sake of others. But I think we can still grab something out of it. There are some few stuff that I knew that I keep saying all the time. Overbought. So is this correct? Rightly spelled overbought. Is that a spelling? No, it doesn't look right.
Yeah, that's a spell.
Okay. So this area over here is the overbought area. Meaning, let me just zoom this out because we don't need the chart for now. We need the RSI. From 80, you guys look at this. This is 20. We have these numbers over here. Then the 80. At the 80 level means the market has overbought. What does that tell us? It tells us that at this point in time, please don't be thinking of buying. It does not say you should sell. It just says don't buy. Even if what is happening in the market, don't buy. Because the market will definitely retrace. Not 100% retrace, because it does not mean you should just go and sell, but don't buy. Also, below here is the area I call oversold. At this level, from the 20s and below, oversold. This area is oversold. What does that mean? When market sells and come below here, the index, not the chart, the index, always check the index. It says don't sell. It does not say buy. It just says don't sell. Please don't sell. Great. That being said, few examples. Does it mean that when the market comes and hit the 80, it's not going to buy? It might still buy. And when it hits the 20, does it mean it's not going to sell? It might still sell. An example is this right here. Market came, hit the 80, and kept going up. So what is happening in the chart at this present time? This is what is happening. Market hit the 80s at this level. We're going to mark that. This is XPS on the 1 minute chart. Market hit the 80 at this level, right? Somewhere, let's take this. So, meaning this candle finished forming here. This candle finished forming here. Went us, took us to the opposite direction for how many pips? 64 pips, approximately 55 pips. There are some traders who will exit this trade at this level. Someone is writing on my channel screen. So there are some traders that will exit this trade at this level, but what I'm trying to show you is that just because the market has oversold doesn't mean you should go and sell immediately. That's not what I'm saying. And just because the market has overbought does not mean you should go and buy. You should go and sell immediately. And just because the market has oversold here, because I know that's what most people go and do. That's the first mistake we do. Just because the market has oversold at this area, you see it, it does not mean we should go to the market and buy. In case you entered here for a buy, see what would have happened. Minus 200 pips on XPS. So, as I said, what the strength index tells us is what you should not do. At this point, you should not sell. You should not go selling. It's sold here good and fine for a reason, but you should not go and sell. So that being said, how do you figure out then the right time to buy and the right time to sell? Steps. There are just few steps to take. Very simple steps that I'm going to give that we should work on this week. So when you find a spot in the market where the market has oversold or overbought, please don't enter when the RSI is somewhere around the middle, where it's up there or where it's down here. Wait until it touches. Wait until it touches. This is not touching. This here is not touching. Wait until it touches or crosses the limit. This limit over here, or margin, or this margin over here. When that happens, take your horizontal line. Let's take an example somewhere in the part. Let's take something else. Let's take US30 or even gold, because gold has been quite crazy. I know some people have lost so much money on gold. So let's analyze this. So this is a moment right here. You see this. This is gold overbought at this point in time, right? Gold overbought at this point in time. So what do I do? Okay, RSI a little bit brighter. Better like this. Is this okay?
Yeah, it's okay.
Okay, so these are just few steps. You put your horizontal, you put your horizontal line, right? And then you go and check where is market at the moment. Definitely we know at this point in time, we don't know what is going to happen here. So I take the horizontal line and I place the market. Okay, that is where I am. In this case, I find myself on a resistance, meaning market might likely reject the resistance, right? Because what have we learned on our study materials about support and resistance? I just hope nothing creepy appears. Thanks. Support and resistance. Good. I'm going to do it here. This is, let's assume this is a resistance, this is a support. Those are lines, those are lines that the market forms. If market goes and hits a resistance, market might likely reject the resistance and come down. It's not 100%, it's not always. And if market hits a support line, market might likely reject and go in for a buy, but that's not 100%. So best case scenario is when market has overbought, and market find itself presently on a resistance, overbought plus resistance means that market might likely reject the resistance. So that being said, you still need to check in case market could still buy before you sell. So how do you check if market could still buy at this moment in time? You go back, you zoom out. Most likely I go to the 5 minutes chart. What I do is, if I was in the 1 minute chart, at this point in time, I would have decided not to take the trade, because on the 5 minutes chart, it tells me that the RSI still has space to buy. Do you understand? On the 5 minutes chart, I still have enough space to buy, because on the 5 minutes chart, this is where the index is at the moment. So at this moment in time, I would have already canceled. But let's assume on the 5 minutes chart, the RSI is also oversold. Sorry, overbought, and it's finding itself on the 80s. So I would still zoom out and try to look for previous supports, previous resistance. So zooming out now, I'm just going to delete the RSI for a moment, just remove it. And this is where market finds itself on this wide horizontal line. So I take my horizontal line and go back to the past. This is the next resistance that market could probably go to. We see it. I place one, and then I check, is there any in the past again? Looks like not. I go a little bit back in time, and it looks like not. No, not really. Okay, here maybe one, but I would just ignore that, because I would check like, always what I do is, market is here. I check how many pips are this. 50 pips. I'm on gold right here. These are 50 pips. In case I enter the market at this point in time, I should be aware of the fact that market, okay, this is where market is. In case I enter the market at this point in time, I should be aware of the fact that market could still buy for 50 pips before it retraces down. You get it? Market could still buy for 50 pips before it retraces. So am I willing to sacrifice 50 pips? Can my account handle 50 pips at this present moment? No. Don't enter. Yes, you can decide to enter. But what I will tell you at this moment is, in case this happens and you find the aqua and the white line are below market price, the next target for market is the blue, or the next EMA above you. So what are your steps to check? Is market overbought on the 1 minute chart, or whatever chart you find yourself? Okay, good. This is market is overbought on a 1 minute chart, right? Good. You place the horizontal line and we go back and check for previous resistance. In that case, we found a resistance here, which came from this resistance that occurred, I think, a day before that, and say, okay, good. I check the amount of pips between these two. Tells me 50 pips. So how likely is it for market to come to this level? Very much likely. Why? Because there is this space for the RSI to buy. But when this starts happening, market dropping, and then actually creates a DeLorean here. When this starts happening and the RSI is dropping as well, it might possibly mean that the market is gathering strength to actually come to this. So you don't buy and you don't sell. I would wait and wait for the perfect entry. And latest, I would have given the trade here for a sell. If when this candle finished forming, I would have given the trade for a sell and said long trade. Why? Because the RSI is still free. It still has some space to go. And we have to be aware of the fact that this is not the end spot for the RSI. The RSI could still do this, which will mean really long trade. You get that. But now that also depends on fundamental analysis. All what I'm teaching us today is technical analysis. So let's take an example for sell for oversold. Market has oversold at this point in time. So what do? We go to our chart. Guys, to make this clear, right, we only buy or sell at perfect entries. That's what you should practice. Not always check your RSI. So market has oversold firstly at this point, right? Not this. We are here. We don't know what is going to happen. And we see that market is on a what? The green is a support. Exactly. Market is on a support. So what do? I go back in time. This was a 5 minute chart. It has oversold on the 5 minute chart. So what I would do is I would check how the market could likely behave in the next minutes by going to a 1 minute chart. Good. I need to delete this because it's going to confuse us. That's not the line this is where we are. So on the 1 minute chart, it also says we have oversold. 1 minute chart says we have oversold. 5 minutes chart says we've oversold. So let's check what's going to happen in 15 minutes to know how long we should be thinking of staying into this trade. We get it. And to know how sure are we. So on the 15 minutes chart, the market has almost oversold. Almost. So what do? I mark the market level and then I go back and check for previous supports, meaning where could market still likely sell to before it retraces. And from there, that is when I want to target the market. That is when I go in for the attack. So I go back in time, I scroll out, and to make, okay, good, this is a line. Okay, this, I already placed it right. Here is one, and where is market structure? I'm already confused with so many lines right now, so let me delete what we don't need. We don't need this and this as well. That's this all we have. And we don't have this also. And we don't have this. And we don't have this. So this is all we have right now on our chart. So we go back to look for previous supports where market could likely sell to before we get in. So we place this, right? We place that. So this is the range in which market could still likely sell to. So at this point in time, what you do is you come 15 minutes, you calculate the amount of pips you would risk in case you enter here. 180 pips on gold. You wouldn't enter. You would wait. You would still wait, and hoping that when you wait here, hoping for the market to reach this point before you get into the market. In case market does not reach there, I go back on the 5 minutes because I don't trade gold on the 15 minutes chart. I go back on the 5 minutes and check for previous supports as well. If we have previous support on the 5 minutes chart, which will give me more data. Does not look like that though. Doesn't look good. So in this case, since this is too much for me, I won't have entered this trade. At this point in time, I wouldn't have entered this trade at this point in time. Simple as that. I would have waited and see if it breaks this. So in the point, I wouldn't have entered the trade right now. So good, I would have left it. And I see that the market is still selling here. But what's happening with the index? The index is actually buying, meaning if market is selling, now write this down. If market is selling, the index is buying. It means market is looking for strength to pull back down. If market, okay, this is not actually selling, market is almost consolidating on one area, but the RSI increased till this level. It means market is looking for strength to pull back down. In that case, I would wait. I wouldn't have entered the trade here. Do we understand why I won't have entered the trade at this point in time? Because the resistance here was the next possible spot for the market to drop to, and the space is just too much, 180 pips to risk. It's not worth entering. So I would wait and then notice that good and fine, it dropped again to this point on the 5 minutes chart. So we can delete this, and we keep this because this was the previous support that we are using. At this point in time, market is here. So what do you now do here? After you've placed this, we know that the next resistance and the next support is this. We check this time around about 120 pips to risk, about 120 pips to risk. Since we've done this and we have done this, we now check how could market behave in the next 1 minute. Where are we? Okay, here we are. In the next 1 minute, we see that, okay, this is the point, right? This is the spot, yeah. In the next 1 minute, we see that market could still sell. Market could still sell. And just because market could still sell, I won't have taken this trade. I have two confirmations that I would not take the trade. The first is the difference is too large. It did not happen. So in this case, we missed the trade. So what's the best case scenario? If you're writing down, write it down. Market has overbought or oversold. The previous support or resistance are not too far from market price. On a higher time frame, if we find ourselves on a 1 minute time frame, meaning on a 5 minutes time frame, market is also oversold. And on a 15 minutes time frame, market find itself somewhere where it's going to actually reject itself. So get this, one more tip for us, just using the RSI. On a 5 minutes time frame, when you find yourself on a 5 minutes time frame, sometimes to get confirmation, you check where market always rejects itself. In this, for gold right now, I can already see without checking that there's nothing here to show. But on RSI, I think I have some. Okay, RSI was crazy, man. This is where we took some money. So yeah, this is a good example. Oversold at this moment. What do? Do you go in and buy here? Oversold. We don't know if this is going to happen. So question number one, oversold. What am I doing? I'm checking for previous support. Sorry, previous support, 15 minutes. Come down. What's wrong? Internet is there. So I don't know what's happening. Internet continuation unstable. So probably I was just going to repeat what I was going to say. I was about taking some few examples for the RSI. I think the RSI should be enough for the Monday. For the Monday, try to practice with that. So the steps are you check for your previous support. Sorry, where are we? That's cool. Sorry. Okay, good. This was an interesting market. So I would place my horizontal line. I'm just going to do this quite some time so we get used to it. After placing my line, because the market actually hit the oversold at that moment, I now place market's price at that moment. So I want to know how deep market could still fall down. I go on a higher time frame, 15 minutes time frame, because I was on the 5 minutes time frame. If I were in a 1 minute time frame, I would have gone to a 5 minutes time frame before the 15 minutes time frame. I zoom out and the white line tells me market's price, right? Good. So I have this support and I also have this support. So I would now come back to where I am. I would now come back to where I am and check. Okay, great. This is where I am, right? On a 15 minutes time frame, I go back to the 5 minutes time frame. And also on the 15 minutes time frame, when I go on a higher time frame, I place my previous supports, in this case, because of a sell. I see that the market has also almost oversold, but it has not actually oversold yet. So I calculate that it will sell again till the next support. That's 200 pips, that's 300 pips for XPS is much. So I would not enter the trade at this moment. This is too much. 300 pips is too much. So you wait. If market retraces here and starts buying, good and fine, we missed the trade. But it was not perfect. We have missed it. It was not perfect. We get it. We wait until it's perfect. That is what I'm talking about. So in this case, it came down again and hit this resistance, the support that we placed. So what happens is we start the new analysis at that moment. We delete this, and right now we find ourselves here, right? We were talking about this on the 5 minutes time frame, so we check it on the 5 minutes time frame. 5 minutes time frame, we see that it has oversold. This is very good. We are not thinking of selling anymore. 5 minutes time frame, we have oversold. 1 minute time frame, we are almost getting, I'm sure my microphone right. Comment to that. So on the 1 minute chart, we see that the market is retracing back up. What does it mean? The market is retracing back up. Look at this. The market is retracing up on the RSI. But what is happening on your chart? The chart is selling. So just because the market is selling does not mean the RSI is selling. And that is why I say when the market is overbought here and the RSI might likely retrace, it does not mean the market will also retrace. That is why we do all this confirmation to have the perfect entry. We get it. So at this point in time, we have noticed that the market has gathered some strength to sell again. Okay, on the 1 minute time frame, this is not even the point, because on the 5 minutes time frame, we were not that precise with placing it. We're not that precise with placing it. Let's put it here. Exactly. So 1 minute. I think it's behind. Here. 1 minute, we see that, okay, on the 1 minute time frame, it has dropped and retraced and came back down, and it finds ourselves on our almost on this line. So what does that tell me? What I calculate now is this. From here to here, this is almost 260 pips. From where market's actually above. Market is here to the next support is 300 pips. Is this space enough to give 300 pips? This is not going to, we don't need 300 pips to reach this. And also on the 5 minutes time frame, the market is still oversold. On the 15 minutes time frame, the market is still oversold. Just on the 1 minute time frame, not. It means that on a long run, we are going to gather pips. And I gave this signal. I gave this buy for XPS. I think I gave this buy for XPS. I'm definitely sure I gave this. And let's see, because this is something, yeah, this is what we collected. I gave this buy for XPS. Definitely, I'm sure I did, because this is something I would have given. I would have done this. Yeah. It's in a downtrending market though, but the entry is good for me to collect about 500 pips. Good and fine. That's how simple it is. Practice this. Just practice. Make mistakes, practice, write the mistakes down. each day I try to analyze the traits I give with what I teach, with the little first step I've been teaching. So we try to understand why I send those traits. Definitely, there are many, many other simple details I take care of to really have this accuracy that I have. But to get to that state, we need to take it step by step, bit by bit, and we are going to get there. Definitely, we are going to get there. But try and practice the RSI first. You touch the RSI, perfect entries only. Oversold, overbought, market price, market level at the moment, previous support, previous resistance, possible support that could still, possible buys that could still go, possible sales that could still go. You calculate the amount of pips and then you check your RSI if the space is worth it. Thank you so much. That's, and I've not even, this is just one stuff about the RSI I'm giving. Until we get this, until majority of you get this, then I will go to the next step about the RSI. I don't want to leave anyone behind. And even those that have been studying this for a month now and haven't still mastered it. So we are going to stay on it until we master this little entry. We could still perfect this entry. This is just the first step, right? And you're going to notice that if you actually do this and use the algorithm I have given you, you might have from 20 trades, you might win 12 or 13. With time, I will show you how to get 15. With time, 15 from 20, and we'll keep going forward to getting 20 from, let's say 19 from 20. It's never 100% sure. Work on this, work on this, and work on this. You have questions, you text me, but you all must have experienced that I don't answer immediately, or I don't mostly have the time, or throughout, I always get to you very late because I receive a lot of messages and a lot of questions, and I have to find the time to get to everyone. And I'm happy I still can make it to get to you all. And at this point, seriously, I want to thank you for your patience. You know, there are people who have been asking me for some days now, days, and I get to them after days, and so they have understanding and they are not mad at me. I want to thank you so much. Practice this. Oversold, overbought. The algorithm, the video is here. If you check the previous videos, it's almost the same thing. Maybe one or two things more or less. Watch them, rewatch, and do. At the end of the week, we check results. Practice them on your demo account. I've said it, on your demo account. Demo. How often do you do trainings? I do them actually every day. Every day when I pray, I do them every day when I have time. Last week we did them every day, and except Saturday, I was too busy during this weekend. So practice them, and on your demo account so you don't mess up, please. That being said, unfortunately, I couldn't touch the Fibonacci extension, which is okay. It's bit by bit. The RSI is the most important right now, because unless we've understood the RSI, then you can actually use the Fibonacci extension pretty well. You could use the Fibonacci extension without understanding the RSI, and yet you're still going to fail. So we have to understand the RSI first. Thank you all. I'm just going to stop recording right now because that's actually it.